YouTube, it's Louis here. I'm finally back with another Egld video. Because I'm back from my holiday, I will try to make more videos since I had such a long time off. I want to get back into the routine of making loads of videos for you guys. Now that it looks like some things are flipping bullish. Since I last left you guys off with the key support that at all costs Egld can't lose, it did not lose it. So it's amazing to see that this support held. It means that what I was saying back then, although many didn't want to believe, I know a lot of you have been supporting the channel for a while now, so you know how the thing goes. The support held as we predicted. Why? Because it was the pivot point. We're always looking for this in any range, guys. When you bottom out, doesn't matter if we are actually going to continue lower, even if it's just a small pullback to continue lower, we're trying to find a point where anything is changing. So once you do bottom out, you come back up quite sharply, and then you come down again to try and take out this low. If you do, then you were going lower just like that. But if we fail to take out that low over here, then I'm interested in exactly that point where we pivot to go back up. So right there, that is specifically why I said I don't want to see candle closes below here. Now, we could have said we don't want to see a close below 42, but I wanted to give you a more precise location, 45, and that's where we came back down to. The reason is we had some body candle closes over here. I just found this area a bit more interesting. We can even drag this line back, and you can see you fell under it, you hit it as some sort of resistance, you got back above it, and you hit it as some sort of support here, coming back up and hitting its support here before continuing to this resistance. This was a double bottom we were talking about the last time we were making Egld updates, and we got above all the EMAs, the key EMAs, so that's all positive. I just want to check if you're actually above the 69 EMA. Not many of you know about this one, and you can actually see if you weren't aware of the 69 EMA, you wouldn't have known that this here is a key resistance. Without it, it looks like we were about to form the bullish cross and head to the technical target, which I of course prepared for you guys over here. And I must have been telling you, if we're closing above this and continuously holding this as support, we're going to head to around $100 back to this previous high. But unfortunately, because we failed to hold the key resistance as support, and we fell under the 20 EMA, that's signaling we're no longer in this short-term uptrend. If we're looking at what the day-to-day candles are going to do, we want to keep our eye on the 20 EMA. More longer term, the 55 and the 200. But day to day, the 12 and the 20, this is what's going to tell you, okay, in the next days, if we're holding this today as support, the next day we should continue up. So that's why over here, we try to continue up. We failed to close above. That's why we went back down to it. And if we ever lose that point, that wick, but also the 20 EMA, we're no longer going up in the short term. We're going down in the short term, and we're going to attack this specific low. So that's why I prepared it for you guys. And yeah, this actually held, which is beautiful, and we're trying to get back above the 55 again. Let's check where the 69 is in this case. You're a little bit above than previously. You can see got back above for 1-2 days and went back under, bit chip chop, but here you're holding it for a good few days, but now coming back down to this. You can see that you actually have not formed the bullish cross yet, so we must see that, because if this now closes back under, there could be a short for you guys back down to the support 45. If you're closing below this key support, you're going to try to come back down to 50 and then back down to 45. You could take a trade just down to 50 all the way down to 45, but you will get a reaction at 50, which could push you back above here. So that is only going to happen if you're closing below this. If you're not, then we're going up. We're going to continue up, but we're trapped between the 69 and the 55 and the 20. So it's going to decide. I couldn't tell you, no one could tell you as of now. What I can say, as you're above these EMAs, you should actually expect to go up. But if you do see a close below them, that's when you could put potential short back down to 50 and 45. That could be a trade of 5 to 15%, let's just say. Now, this is an old double bottoms neckline. It is going to be a valid resistance going forward. We'll draw a red line over here, but there is a double bottom forming, and the neckline of that is not going to be, it's going to be here, because this is the much larger double bottom now playing out potentially. We're not validating it as of yet. Guys, if you enjoyed today's update, please like it. Help us grow the channel to 5k subscribers. Share this content out on Twitter so more like-minded people that don't want to be fed bullshit are getting this information, because there's too many moon boys out here. Let's push for more comments and likes. Let's hit over 50 likes on this video if we can. We've also got an inverse head and shoulders over here. If not that, we've got this double bottom. We just need to break this neckline, which is in around 67. If you do see gold closing above $67, then expect that we're going to go towards its technical target. Its technical target is from the lowest body candle close back up to this. I am doing a 30% discount on my course at the moment, where I teach you all of this, going from a complete beginner to someone being able to read the charts exactly like me. If you're interested, I've got a discount for 30% off my course. It's over 6 hours long with 30 plus videos, which you'll have access to for the rest of your life. Just message me over on my Twitter. It's in the link down below under this video. And yeah, this offer lasts until Monday. If you just want more information on it anyway, just head over to my Twitter. Yeah. But yeah, if we're closing above 67, we got a target at about 108. I'd say key psychological level is 100. That's where I look to take some profits if you were in trade there. In a buy trade, sorry. The 200 EMA is also going to be key resistance. So really, that is where I would expect a big reaction. Sometimes you can overshoot it, but eventually fall back under it. Just know that this is a key area. This is determining your trend. So if we are below this, when you're coming up to it, you should expect that you're going to get a reaction, because we're in a downtrend. This should be key resistance, the biggest of resistances, because this is deciding your trend. So if we're ever above this, you know we are in an uptrend. So as you're going up to it, you're not technically safe. It is nice to see that we have a double bottom with a target beyond it, but this actually might not let it get there. You should be able to, but at first you're going to reject this because it's such a key resistance going forward. But yeah, it's really amazing to see that this is the first time in a very long time, since back in March, that Egld is technically bullish on the daily time frame. We need to see these EMAs continuously held, and that's when we're going to head back to the $67 key resistance, back to this $100 target. But we've also got that head and shoulders over here. You can see that nice retest with the CPI data actually pushing price down to retest this neckline out of this head and shoulders over here. So it's nice to see that's confirmed as support, a resistance that's lasted over 140 days and retesting it 149 days later as support for the first time. So you haven't seen this tested as support since before, since over here. So much longer than 150 days ago. So it's good to see that that's a very strong confirmation that we're going to go up with the EMAs as well. So yeah, attack this, close above it, and we're going up. Lose this support, and you've actually got a target to the downside. Let me show you. Into this green zone below, about $30. That's only if you're now closing back under this purple line and back under $45. As long as we're above both of them, as well as the EMAs, that's a third. And then if we're getting above this W, that's a fourth thing. And above the 200 EMA, the fifth thing. Those are such extremely bullish signals. So if we're above the 200 EMA, it's sort of like we can relax now. Let Egld climb back up to the previous all-time high. We are about $90, and $90 I wish, 90% off the all-time high. So in my eyes, what I tell my students is that anything under the all-time high is a great buy. Okay, as simple as that. I'll just show you over here. Well, yeah, so you can see this was the all-time high. We dipped. If you're buying down here, if you're buying along the way up, even if you're buying at it, it's fine, because in the future, you shouldn't come back to it. That's why you want to buy below it, not beyond it, because even if you bought the low last year, we're below that, because that is past the all-time high. So yeah, anything beyond this now is going to be a risky. Anything beyond that is risky, with the potential scenario of dipping back down all the way back down to here. So we want to be buying until then. You've got a long way to go, guys. Look at that over. Well, let's reduce that a bit. We've got a 10x, guys. Come on. So you can prepare. You've got a long time to prepare. It basically means that, yes, this price, you might think, oh no, I want it back down at 30. I want it back down at 20. Guys, it's 90% off the all-time high. This is a great buy. It's even below the EMAs. The EMAs haven't even formed a weekly bullish cross yet. Yes, it means that we're still in a weekly downtrend, but we're seeing other coins like your Quant, like your XRP finally bullish I think it's on the weekly time frame. Might be wrong, XRP USD, but I'm pretty sure. Yeah, on the weekly time frame over here, if we get rid of these drawings, you can see XRP is bullish. Quant USD, it's above all the EMAs. Can you see? So these are very bullish cryptos. So Elrond should follow if Bitcoin can behave, and if Bitcoin can behave, then yeah, Elrond will follow. And so far, so good. Go check out today's Bitcoin update. It's so important, especially when I'm not making an Elrond update. You know that there's a key level that I don't want to see Bitcoin losing. And as long as we're above that level, Bitcoin is technically bullish. And so if Bitcoin is bullish, all the cryptos are bullish. And that is why you're seeing cryptos like Quant basically being like what bear market. XRP as well, not giving a crap. Kept climbing back above the 20 weekly EMA, even with a court case hanging over its head. These are seriously bullish signs in these bearish times. Thank you guys so much. Please check out my discount on my course. Check out the mentorship. I've got a few slots open as well. Please support the channel, supporting the algorithm by liking, subscribing, commenting, turning the notification bell on, but also following me over on my Twitter, Louis_crypto. Thank you guys, and as always, peace.